Good afternoon. Time to wrap it up for November the 12th, 2014. Man, another day has come and gone. Had a pretty good day today. Probably our worst call was the E-mini. I thought it would go a little lower. I thought we'd get down to the 20-25 area. 27, 28 held as support. We were buyers into weakness. We thought the market would at least retest the overnight session high, and we had a chance to make new highs. And we still are in a situation where we have a chance to make new highs. The 50-lot trader has not abandoned the long side of the market. They're going to go home long tonight. The market is moving higher. So we had a 25 area plus or minus to get long. Right here's the beautiful trade, a retest failure. Set up nicely. And the market trades up to 34 before the seller set in. Our number 2 sell zone was 34 to 36, depending on how you wanted to play it. If you're playing for VTOPs, value area high, sell, you're short. In the 33 area, if you wait for this S to set up over here, you're short in the 31 area, and the market trades down to 28, 29. Another beautiful setup for the long side, another retest. We talked about this trade. Everything was going for it. This time the market eventually trades up to 37. Move, pause, move. So this market is still pointed higher. As choppy as it is, there's a beautiful retest failure up here. Trade doesn't really develop. This time, pay attention to this right here. These bars are so thin when it rallies up. There's no volume being done to the upside. Another retest failure right here. You sell stop in the market when you take out that bar's low, and it gets you back to the mean green line. This is our mean green trade, so you've got a limit buy. A tick inside that, you're long in the 32.50 area, and the market trades up almost to 35. So really, really good trading in the E-mini today if you took up our prescribed trades and followed our entry rules and took our trading targets of at least 3 points. On to the F1 screen. Every market is looked at through the same set of screens. The F1 screen is the capital flow screen. Right now it's an inside day. That means trading range. Because the market is moving higher and we've got very strong P's behind us, the bias is to the upside. So we're buyers into weakness until we get rejection or a retest of the current high, and the market starts to move the other way. Looking at our F2 screen today, which is when somebody asks me, which way is the market going? This is where I always have to come. And you can see that putting everything together, you can see the P that we saw on the other screen. Pretty strong, and you can see that we had 238 in volume here. We've got 235, so volume is moving higher in the distribution and higher than it previously was there. So the easiest trade to see is going to be failure to take out this 37, 39 area. I mean, it's the current high, and if resistance holds, wherever it might be, we can get short. Then we've got to bust this 30 area, this low volume area. So 30, 32 will be buy number 1. And our 25, 27 will be buy number 2. Tomorrow's news, jobless claims. Our default, 285. I haven't looked at the number, but the only other piece of news is JOLTS. And they'd like to see it higher than last month. That would be indicative of job expansion and job growth. I got a question from somebody asking me, what is the actual number of people out of work? How many people want jobs that can't get them? And this is just roughly done. Normally, we're 63% plus of the population. Right now, we're 59% in the workforce. That's come down quite a bit. 4% of the people have gone out. What does 4% of the entire population equal to? 13.2 million. If you took 60% of that, you're talking about 7 million plus. So somewhere between 7 million and 13 million people that would like to work aren't working. And those are huge numbers. And that's why when people look at the economic numbers and why they wonder why people aren't buying houses, or all the subprime loans that are going in for automobiles, or college students taking out new student loans to get their master's degrees. This is why right here. It's just what we need are jobs, real jobs, not temporary jobs, good paying jobs. And the economy is just not generating them right now. So what they'd like to see in the JOLTS number is, that number getting bigger each month, which would show that the economy is actually growing with jobs, good jobs left untaken. Okay, if we blow through this 37, 39 area, the next area would be 44, 46. I think the market's headed for 2050 plus. First buy is going to be 30 to 32, second buy 25 to 27. And we don't have much news to drive the trading tomorrow. So the F1 screen says trading range. The F2 screen says find a place to buy it. Okay, this is an unusual auction that we have. We've got two down auctions. The market moved down on both days, price-wise. We had the auction here at 12.5, and the auction here was 10.5. We got a higher low and a higher high, so this F1 screen says we're a buyer. When we look at the F2 screen, we don't see the same pattern at all. We see a pattern that favors the sell side. Got a double distribution down. The market spilled in a period. Here's that move out of the middle. And so the F2 screen is pointed lower. The close was 10.5. I think the market is headed lower, so our first trade is sell failure to take out 12 to 16. And then 19 to 23, where we were this morning, which was a hell of a call, if you think about it. On the buy side, because we are pointed lower, we've got volume down here at 6.5. We've got a low at 3. We've got this other low at 2. I'm going to put the buy down at 1 to 5, but it may take 9s to get into. I think everything is pointed lower. The 30-year is the toughest piece of paper to move, and they usually start off the day in the 30-year lower and rally it back. We're going to put a question mark by 9. We're going to try and buy it cheaper based on the structure, based on what we're looking at. The news out of China, they've agreed to cooperate on climate control. China doesn't have to change this thing that they're doing. We're going to speed up our implementation to clean up our air. What most people don't know is that if you measure carbon dioxide alone, there is less carbon dioxide in the air that comes out the East Coast than there is in the air coming onshore on the West Coast. So we actually pull CO2 out of the atmosphere. And we do that because of all the plants and all the trees that are growing and everything else. But we're not the causes of pollution and the worst kind of pollution, etc. We the other parts of the world, India and China, are, and they won't sign this accord. Germany has put themselves in dire straits energy-wise because of their rush to go green. And there are 4 sources of concentrated energy: uranium, coal, natural gas, and petroleum. And that are there 24/7, 365 days a year. You can't say that about solar. You can't say that about wind. You might be able to say that about the tides if they work both ways, if the mechanism works both ways. But it's not the case with us that the crony capitalists want to develop, and that the Greens are really pushing. The best case scenario about the Greens is that they are the Luddites of old. The worst case scenario about the greens is that they use climate to push their political agendas. So here we are on the 30-year. The last rotate stopped up at 5. Then we got a high at 10. Then we got a high at 13. So 10 to 13 is where resistance is. So we'll sell failure 8 to 12 right here. Can't get through that. Then 19 to 23 like we had it this morning. On the buy side, 25 to 29. I think they're going to have to strengthen the knob spread. Yeah, we made a lot of money on the knob spread spring through early fall. I mean, it was almost guaranteed a $500 winner in the week of the auction. But we've lost that. The sentiment has changed a little bit. And markets change. They get hot. Everybody kind of gets turned in on them. Then the powers that be. Yeah, I mean, you can't. You take money from people in our game, and they don't give it to you. It takes trading prowess and expertise to prevail in this arena. You're up against the best minds in the world for the long-term traders, and you're up against guys that are very, very disciplined, that follow the rules, that have done their homework, and they know what they're doing on the shorter-term time frames that trade, which is what makes it interesting when you get down to it. Something's always different. Okay, we talked about this volume up here over the last couple of days and this volume down here. I think we're headed to that. So 55 plus or minus will be buy 1. I like the short side of the gold market. Don't particularly care for the long side. Then 50 plus or minus will be buy 2. On the sell side, the selling started at 62. We got a high of 63, then a high of 65. We're at 58 right now, so this little spill right here, so we'll make 60, 62, sell 1, pretty aggressive, and 65, 67 for sell 2. Basically leaning against 60 to 65 to get short and leaning against 50, 55 to get long. To keep it simple. And in those areas with our setups, you can take trades. One of the things that we've done differently, a lot of people come in to see the market profile and they see it as the be-all and end-all, and I think it is. But what we've done that's different than most people is that we've given you rules to trade the market profile information by or with, and most people just talk in terms of this is the market profile and this is the value area and this is the point of control. We don't look at time. We look at volume, time, price, volume, which makes us very much different than the other people. In fact, right now, we've gotten knocked off regularly. The long-term distribution on the right side of the screen, overlaying volume on top of the profile, it started right here. That goes back to 1989 for me. The first software that I had out that did it was in 92. The VRAP, the green letters there, everybody's picked that up now. So we've quietly innovated a lot of concepts that you see on a lot of software screens. And this industry, like you all unfortunately well know, is a lot of people out there more than willing to take other people's ideas and run with them. And if you're good at marketing, you can get away with that. Okay, I like the short side of the market. I don't, but we are at support right here. So the 76.50, so stops below 76.50, 76 and a quarter, 76.50 buy 1, and then 75.75. 76 for buy 2. I think we're headed below 75 now, or at least 275. On the sell side, the last rotate up started at stopped at 16, then at 46, and we're currently at 86. So 76, 76 and a quarter, sell 1, pretty aggressive. and 77.50 to 75, sell 2. And to the euro, one of the things that we've learned, probably everybody's painfully learned in the United States, is that you can't fight the Fed or you can't fight the tape. And in the euro, the world of the euro, they have said it's going lower. Goldman said 125 before the end of this year. They were right. They were forecasting that in November, December, and they say 120 by next year. So the large institutional players are playing it that way. 125 is the high, and 24 is the low right now. This morning we had a 24.15 to 25 on the buy side. We'll keep that for buy 1. Then stops below 124 for buy 2. On the sell side, 50 right up here, so 45 to 55, sell 1. And then our 70 to 80 for sell 2, picking up this volume area up here. Not much in the way of news tomorrow. All the world leaders, they probably are going to wrap up. I didn't see what time they would wrap up their Asian tour. And, you know, it's another boondoggle with lots of caviar and champagne and all the other fine delicacies of the world that we get to pay for. But that's a pretty nice job. You get up there and live large and never held accountable for anything. Pretty nice work. Hey, I'll see y'all at 3:30. I will be shutting down the room here in a little bit. We'll do this afternoon's webinar. We're talking about the 3-2-1 methodology, and we're going to go over the charts that we use to come to our decisions, and really a couple of really neat chart setups that you'll enjoy seeing. So I'll see all of you in the room after for the webinar when it's all said and done. Later.